Hey there everybody, welcome into this video. Hope you're all having an absolutely fantastic day today. Now I know things out there in the market are a little rough, but I sure hope you're not letting that get you down. Now my last few videos I've been talking a lot about the macro economy, but in this one I'm ready to dive back into the weeds and do some in-depth company research. Now in my last video I did mention that there are certain areas of the market that if you're a savvy business person or investor and you stumble across them, can be massive opportunities because they're areas where the rich or institutions are staying away from. And in this video, I'm going to be talking about an area of the economy that I believe is a massive opportunity that many institutions and rich people are staying away from right now because it's federally illegal. Now, if you didn't get the hint, it is cannabis. Now, in this video today, I'm going to be talking about two different cannabis companies, and I'm going to be comparing the two to see which one I would rather put my money in. Now, the reason I'm doing that is because personally, I want to invest a larger percentage of my portfolio into this industry, and I've narrowed it down to two different companies. Both of them I do already own, but I want to start off this video by saying that nothing in this video is financial advice. It's totally for entertainment purposes, and please do not go out and buy a stock just because I talk about it or because I say that I like it. But these two companies are Green Thumb Industries and Planet 13. Both are absolutely very intriguing companies. Now, before I dive deep into the research on these individual companies where I'm comparing them both, I want to give you a little bit of a rundown in this industry and why I think it's such an incredible opportunity. Now, there's absolutely massive growth projected to be in this industry, anywhere from 15 to 20% over the next 7 years until 2030. Now, it is projected to be a $100 billion industry by that time, which is absolutely incredible. You know, if you're investing in a growth business, you want it to be in a growing industry. And this is a massively growing industry. Now, not only that, there are many states that haven't yet legalized, and there are still many states that only have medical legalized. So once all these states end up coming into the recreational market, there is going to be massive expansion and market opportunity. There's also the fact that 73% of this industry right now is still illicit or illegal. And as all those individuals in all those states where it's still illegal to use cannabis shift over and it becomes legal, and they shift over and they start buying legal product, it will be a massive expansion for the legal market. Now, another reason is that I believe the new younger generations growing up today will likely find the use of this product much more acceptable since they are growing up in an age where it is legalized in many areas, compared to when myself and our parents were growing up and it was illegal and scary. It is just much less stigmatized and demonized than it was when I was younger, so I really think there could be a massive expansion in this market as a whole as more people become of age and find interest in the product. So let's dive into what both these companies have in common. So both these companies own and operate cultivation facilities and processing facilities that produce their branded products. They both operate retail locations that sell those branded products as well as other competing products that are popular and have high sales volumes. Along with this, they also sell their branded products to other competing dispensaries, which boosts brand awareness quite a bit. Given this, they are constantly competing in two dimensions with their branded products versus other popular brand names, and with getting consumers to visit their locations instead of rivals. Both these companies also operate in the recreational and medical markets, which allow them to have somewhat diversified revenue sources. But moving on, let's dive a little bit deeper into these individual companies and get an idea on how they differ. So, Green Thumb Industries is a $2 billion business, where Planet 13 is a $200 million business. And as you can tell from just that, they compete on completely different levels, different playing fields. But they also compete in slightly different areas of the market. Green Thumb Industries is competing more so in the convenience side of the market. They want to be on every corner, and they want to be right in front of your face. They want to be the closest location near you. And you can tell this by the fact that they have 77 locations in 15 states, where Planet 13 is more competing in the higher end, expensive, nice experience side of the market. They want to provide you with an incredible experience, so you just have to go back. Now, they don't just want you to go out on their store floor and purchase a few items, but they also want you hanging out in their lounge, grabbing a coffee, or even eating lunch. Anything that would provide you with a more enjoyable, unique experience that would entice you to come visit again. And because of this, they should be able to generate potentially additional revenue and more profits from these other areas of their business, potentially even demanding higher margins than competitors in the future due to their differentiation. They only have 3 locations in 2 states. But both of these companies have 6 brand names that they're trying to grow into these massive brands that hopefully one day will be similar to how Jack Daniels and Grey Goose are in the liquor industry. They have brands that compete in the flower, wax, pins, edibles, pre-rolls, all the different areas of this industry. But let's dive a little bit deeper into the finances of both these companies. So let's look at revenue. Now, Green Thumb Industries just came out with their 2022 full year 10K, And because of that, I have a little bit more updated information on Green Thumb Industries than I do for Planet 13. I only have through Q3 of 2022 for Planet 13. So to compare these companies on a realistic basis, I'm going to be comparing a lot of these numbers from Q3 of 2022. But I'll try to show you a little bit of the newer information I have on Green Thumb Industries as well. But let's get into it. You'll see what I mean. In Q3 of 2022, Green Thumb Industries had $261 million of revenue, where Planet 13 had $25 million of revenue. So if you divide the $261 million of revenue from Green Thumb Industries by their 77 stores, that gives you about $3.4 million per store per quarter that they're doing right now. Whereas Planet 13, on the other hand, if you divide their 25 million by their 3 stores, it comes out to about 8.5 million. So 3.4 versus 8.5, you can tell just by that they're competing in different areas of the market. The Planet 13 stores have the potential to do way more business than the Green Thumb Industries stores, but Green Thumb has a whole lot more of those stores doing the business. Green Thumb Industries did have revenue growth of 14% from 2021 to 2022, which honestly isn't great, but things in the market have been quite tough. Planet 13, on the other hand, since it's a lot smaller, I honestly don't see them having any revenue growth in 2022. My projection, I have them doing maybe $120 million for the full year 2022, but who knows? We'll see where that goes. Their price to sales ratio for Green Thumb Industries is 1.7, where Planet 13, it's 1.8. I don't typically like comparing price to sales ratios between two companies. What I like to do is compare those price to sales ratios to their historical values. So Green Thumb Industries has 1.7, but their historical is 6. Whereas Planet 13 has 1.8, but their historical is 4.7. So to me, it looks like Green Thumb Industries is at more of a discount at the moment. Now let's dive into a little bit of their margins, which have been compressing a bit. So Green Thumb Industries has a gross margin of around 50%, where Planet 13 has a gross margin of around 41%. Green Thumb Industries' larger gross margin is likely due to just economies of scale. They're able to get better deals on products since they're buying in bigger bulk. Green Thumb Industries has a net margin normally of around 8.5%, but for the full year 2022, they had a net margin of 1.2%. That was solely due to a non-cash valuation adjustment. So realistically, somewhere around 8% is their net margin, whereas Planet 13, on the other hand, has a negative 14% net margin. So right there, you can see that these companies are in completely different areas as well of their business growth cycle. Green Thumb Industries is already making profit, where Planet 13 is not. One thing I do want to mention here is that since this industry is federally illegal, these companies pay taxes slightly different than normal corporations. Basically, they pay taxes on their gross income, not their net income. So there are many expenses that cannot be used as write-offs for cannabis companies. So even though their tax rate may be the same as a similar sized company in a different industry, a 24% tax on their gross income equals roughly a 70% deduction in their net income. Both these companies and everyone in this industry are having pretty extensive margin compression, and Green Thumb Industries on their conference call discussed 2 reasons why they think this is happening. The first is because consumers are trading down. They're buying cheaper products instead of, the more expensive ones, as well as the fact that since there's so much competition in this industry, it's not only making it difficult for the smaller competitors to compete, it's also making it more difficult for the larger competitors that are established in the market to keep their margins very high. Let's move on to operating cash flow. This is one of the metrics that I find the most valuable when looking into a company. I just want to see how much money they're making from their operations. So Green Thumb Industries had an operating cash flow of $159 million in 2022, which is pretty damn good for their size. And their price to operating cash flow, when you compare it to a company like Coca-Cola or Johnson & Johnson, they're trading at a much lower price to operating cash flow. So to me, that's very, very intriguing. It either means those companies are trading high or this company is trading extremely low. But considering that Green Thumb Industries is going to have much more growth than those companies, it seems like it's a very, very interesting opportunity just there on a pricing basis. Planet 13, on the other hand, has been flirting with operating cash flow profitability, I guess you could say. In Q1 and Q3 of 2022, they had positive operating cash flow, but in Q2, they didn't. So they've kind of just been bouncing around that line, and they haven't proven to me yet that they have consistent operating cash flow profitability. Let's move on to free cash flow, though. This is also a very important metric, but given that these companies are both pretty young and in the growth industry, it's kind of expected that it's going to be negative. But let's get into it. So Green Thumb Industries had a negative free cash flow of $53 million, which is 5% of their revenue. Whereas Planet 13 had negative $80 million in free cash flow, which means they lost more money than Green Thumb Industries, even though they're a much smaller company, which is 75% of their revenue, which is very, very bad. If you were to use these numbers to find out their runway, how long they could continue losing this much money based on the amount of cash they have, Green Thumb Industries would have 30 months that they could continue operations with the cash that they have on hand, where Planet 13 only has a 5-month runway. Realistically, I see this as a massive test for Planet 13's management. They have to get their costs down if they want to survive. Do I think it's possible? Yes. They don't have debt, so I think they're in a pretty good position. But realistically, it's going to be difficult, and that's why I see it as a test for their management. Moving on, SG&A expenses for Green Thumb Industries is 31% of their revenue, where for Planet 13, it's 58% of their revenue, which is extremely high. Continuing down my list of topics here, their financial position. So Green Thumb Industries has short-term debt of $1 million, long-term debt of $274 million. And when you compare that to the $177 million they have in cash, that gives them a cash to debt ratio of around 0.64. Typically, I like to see that above 1, but given that this is such a high growth industry, I'll allow it. Planet 13, on the other hand, has $0 of short-term debt, $0 of long-term debt, so they have no cash to debt. They're in an extremely good financial position. Now, if you were to look at their current ratio, which compares their current assets to their current liabilities, Planet 13 has a 6.53, which is extremely good. They have a total ratio of 7.34, which compares their, total liabilities to their total assets. Whereas Green Thumb Industries, on the other hand, is looking a little lacking in this area. They have a current ratio of 2.4, and they have a total ratio of 3.17. Neither of those are as good as Planet 13, but they're still pretty damn good. Now, another thing I like to look at here, which is a little bit atypical, is a cash to market cap ratio. I like to compare the amount of cash these companies have with their total market cap. So if I were to buy Green Thumb Industries as a whole today, I would be getting 9% of the price that I'm paying in cash. Where Planet 13, on the other hand, I would be getting 26% of their market cap in cash, which to me makes Planet 13 the winner on that one. In summary, Green Thumb Industries is larger, but they have more debt than cash. They have net income profitability, but they're closer to free cash flow profitability. Planet 13, on the other hand, is smaller, but they have a very, very clean balance sheet. Negative net income, but they are getting closer to positive net income, and quite a bit of negative free cash flow, which it's not looking like they're going to be anywhere near free cash flow positive for a while. Now, another thing that I find very, very important when looking into these businesses is insider ownership. Now, Green Thumb Industries has 3.4% of their total market cap owned by insiders, whereas Planet 13, on the other hand, has 39% of the business owned by insiders. To me, Planet 13 wins. That's incredible. 3.4% is pretty low on the Green Thumb Industries side. The reason I like to see a high CEO and insider ownership is because if the insiders, the CEO, they're the people making the decisions for this business. So if they were to make the wrong decision, I want them to be hurt as bad as I am by that decision. And the more they have invested in the business, the more on the same playing field we both are. Now, another thing I place on about the same importance level as insider ownership is stock-based compensation. So Green Thumb Industries had stock-based compensation as a percentage of their operating cash flow of 17%. So that's not crazy, but it has been increasing over the past 2 years. And from 2021 to 2022, it increased by 32%. So I don't really like to see it going up, but as a percentage of its operating cash flow, it's still a small amount. Now, Planet 13, on the other hand, has 263% of their operating cash flow in stock-based compensation, which means they're paying out over 3 times what they're making from operations to insiders in the form of shares, which to me, I just don't like to see. That's very, very bad. But it was cut in half from last year. So give and take there. One's decreasing but has a higher percentage. One's increasing but has a lower percentage. I tend to like the lower percentage. And finally, last but not least, let's talk about valuations, which is probably the most important part of this entire video. So the way I do it is I make a bear, a medium, and a bull case. So my bear case is what I think they will definitely be able to achieve, even if they make some mistakes. My medium case is what I believe realistically is most likely they will be able to achieve. And my bull case is if they were to do everything correctly. So based on my confidence in the management team, based off of doing other research, I will decide where I'm willing to invest, given my buy targets for each of these levels. Now, let's get into it. So for Green Thumb Industries, For my bear case, I have them having operating cash flow growth of 10%, shares growing 1%, and a price to operating cash flow of 15. Now, this gives them a projected operating cash flow of $356 million in 2032 and would give them a fair value today of $7.92, which is a few percent below where it's at right now. So it's very, very close to my bear case already. Next, my medium case, I have them growing at a 13% operating cash flow growth rate, which would give them $466 million in operating cash flow in 2032, which would give them a fair value today of $10.36 a share. Now, that would mean they are already dramatically undervalued if I truly believe that this is the case, and I truly do. Moving on, though, let's go to the bull case. Now, for my bull case, I have them growing at an 18% CAGR for their operating cash flow, which would put them at $720 million in operating cash flow by 2032. That would give them a $15.98 fair value, which would put them extremely undervalued right now if I truly thought that this was possible. Now, I'm not gonna lie, $720 million in operating cash flow is going to be difficult for this company to achieve, but given that they're the third largest business in this industry, and since this industry is expected to be $100 billion by 2030, if they were to just get like 7% of that total market, this would be a very, very realistic operating cash flow. Moving on, let's talk about Planet 13. So Planet 13, I had to analyze a bit differently. Since they don't have free cash flow, net income, or operating cash flow profitability, it's a little bit more difficult to do the calculations for this business. And because of that, I trust my projections for Green Thumb Industries much more than I do for Planet 13. But because of that, I put a lot more safety factor in there for myself. And this is just what I see. Don't take these numbers for yourself. You go do this research on your own and get your own numbers. But for me, my bear case, I have Planet 13 at a $500 million market cap, which that would be a double up. But over the next 5 years, that's really not that impressive. That would be with them having $225 million in revenue and an 11% margin. My bull case, on the other hand, is I have them at a $1 billion market cap with a $335 million a year revenue and a 16% margin. Now, do I think $1 billion market cap is reasonable for this business over the next 5 years? Yes. Realistically, if this company gets to a place where it can have all this expansion that it's talking about, and it expands into Chicago, Illinois, and it expands and has multiple superstores in Florida, there's no doubt in my mind that we could get this business to over $1 billion. I do really still love the business, but after doing all this research and looking at all these metrics, I'm choosing Green Thumb Industries. Even though it does have debt, it's profitable and it's making money, so it's going to be able to pay down those debts. And it's in a much better position given the rough area of the economy. Planet 13 right now still needs to prove to me that they can lower their expenses. Do I believe they can do it? Yes, but I haven't seen it yet, so I'm not going to go investing blindly. I need to see that before I can invest more money with Planet 13. Now, that's my choice. Hopefully you found this video interesting. Thank you everyone for supporting my channel. I truly appreciate it. I hope you all got something out of it. And if you did, please leave a like or a comment down below. If you'd like to see more videos like this comparing two different companies, please leave some companies down in the comments and I'd love to do it for you. I also wanted to mention that the platform I used for a whole lot of these screenshots in this video is Stock Unlock. It's made by another YouTuber and I love this platform. Honestly, it's made my whole experience of doing research go much, much quicker. And considering I have, a real job at 9 to 5 that I have to work every day, being able to consolidate the amount of time that it takes for me to do research on a company is very, very valuable to me. I think it's maybe like $5-10 a month for this software, but I think it is absolutely worth it. It's very, very helpful and it makes doing research just go so much smoother. But if you are an experienced investor and you are interested in seeing the platform and experiencing, I'm pretty sure they give like a 7-day free trial or a 14-day free trial or something like that. I'll leave a link down in the description if you're interested. But that's going to do it for this one, guys. Thank you everyone for watching. Have a great rest of your day. Bye-bye.